Right, Lamai, we will discuss question number 181 onwards. Right, from this video. Right, look at the question number 181. Right, look at the question 181. Which of the following statements are, okay, it should be are, which of the following statements are true or false regarding the conceptual framework? Regarding the conceptual framework for financial reporting. Conceptual framework discussed in chapter 11. Chapter 11. Okay, right. Then A, providing the basis for setting accounting standards. True or false? Conceptual framework provide the basis for setting accounting standards. True or false? True. That is true. Look at the second one. Look at the second one. Make financial statements better understood by users. Yes, correct. That is true. Make financial statements better understood by users. Right. C. Provide guidance on preparing financial statements in the absence of applicable accounting standards. If there is no applicable accounting standards, conceptual framework provide the basic guidelines to get decisions regarding accounting matter. True or false? True or false? Yes, true. That is true. D. Providing a theoretical foundation to increase the quality of financial information. True or false? Providing a theoretical foundation to increase the quality of financial information. True or false? Yes, that is true. That is true. Right. Question number 181. Right. Lamai, look at the question number 182. Look at the question 182. Try to get the answer for the question number 182. Here, specify whether the equity of business will increase or decrease due to the following transaction in a service business. Here, you need to mention whether the equity of the business will increase or decrease due to the following transaction in a service business. Sometimes no change. Okay, equity increase or decrease in a service business. Sometimes no change. Now we can get answers right now. No change answer for some items. I think right. Look at the question. A, cash receipt for service provided. Equity increase or decrease in a service business. Cash receipt for service provided. Equity increase. Equity increase. Cash book debit. Service income account credit. B, sending invoices to customer for services rendered. Equity increase or decrease? Equity increase. Right here, sending invoices for the already provided services. Okay, risk and reward already transferred. Therefore, because of that, equity increase. C, payment of VAT on service income. Payment of VAT on service income. Payment of VAT. Equity increase or decrease? Equity increase or decrease? If they have registered for value-added tax, if that service business organization has been registered for value-added tax, then no impact to equity. No impact to equity. Collected VAT on services, they can pay to the tax department in Sri Lanka. Therefore, no impact, no change, no change. Okay, no change. Right, no change. D, offsetting service receivable against payable. Offsetting, okay, offsetting receivable and payable. Because of that increase, equity increase or decrease? No change, no impact to equity. Decreasing asset, decreasing liability. No impact, no change. No impact to equity. Okay, right. Answer for the question number 182. But students, look at the question number 183. Question number 183. State the primary book to record the following transaction done in the motor vehicle selling company. Okay, the nature of the business organization selling motor vehicles. Selling motor vehicle selling company, which has been registered for VAT. They have registered for VAT, right? A, opening a letter of credit by depositing 60,000 of the purchase price in the bank. What is the primary book? They have deposited 60% of the purchase price to open a LC account. What is the primary book? Cash payment journal. Cash payment journal is a source document. They have deposited 60% of the purchase price in cash payment journal. Cash payment journal is a source of primary book. B, bought a car for the use of marketing director on credit. They have purchased a motor vehicle, a car. That motor vehicle is used by the marketing director, and purchased on credit basis. Then we have the record. General journal. General journal is a sort of primary book. General journal. C. Look at the C. Selling cars on credit. Selling cars on credit. What's the primary book? Selling cars on credit. Sales journal. Yes, sales journal is answer. Right. B. VAT calculated on sale of motor vehicle on credit. VAT calculated on sale of motor vehicle on credit. If they sold motor vehicle on credit basis, okay, then the transaction should be recorded in sales journal. Sales journal. In the sales journal, you need to record that separately in a separate column. Then, what is the primary book? Sales journal. Sales journal is a primary book. Sales journal is a primary book. Okay, right. Right. Come and look at the question number 184. Look at the question number 184. The balance of the bank account as of 31st March 22 did not tally with the balance of the bank statement due to unrealized check of 20,000. Due to unrealized check of 20,000, the bank account did not tally with the bank statement. This check has been realized in April. This check has been realized in April. Right? Following are the transactions done during the month of April 22. Right? Checks deposited during the month 80,000. Check deposited, right? Lamai, after realizing that check deposited in March. Deposited in March. Okay, March, but realized in April. Realized in April. Bank account balance equal to bank statement balance. And then here, this check has been realized. Okay, this check has been realized in April. And after realizing that check, cash account balance is equal to bank statement balance. Following are the transactions done through the done during the month of April 22. These are the transactions, April month. Check deposited during the month 80,000. Check issued during the month 40,000. Direct remittances recorded in the bank statement 10,000. Right. Deposited check of 30,000 and issued check of 10,000 are not included in the bank statement, and the balance as per the bank statement as of 30th April 22 is 320,000. Our bank statement closing balance is how much? 320,000. Bank statement closing balance. Right, and then adjusted bank account balance as of 30th April 22. And then second one, B, the value of the check realized during the month of April 22. Right. Try to get the answer. Hold the video and try to get the answer. Right. Now we will discuss. Look at the question. Look at the question. Right. Look at the question. adjusted bank account balance. We can calculate adjusted bank account balance used to the bank reconciliation statement. Bank reconciliation statement. Here, balance as per bank statement. Balance as per bank statement, how much? As of 30th April, 320,000. 320,000 balance as per bank statement. And then students, then unrealized check plus unpresented check. Unpresented check minus. Yeah, balance bank statement. Balance as per bank statement. Check deposited during the month 80,000. Deposited check 80,000 out of 80,000 checks. Deposited check 30,000 and issued check 10,000 are not included in the bank statement. Out of this 8,000 deposited check, 30,000 unrealized check. Unrealized check 30,000. Unrealized check 30,000. And issued check during the month 40,000. Out of 40,000 check, 10,000 not included in the bank. 10,000 not included. Unpresented check 10,000. Unpresented check 10,000. The students balance as per adjusted bank account. Balance as per adjusted bank account. How much? How much? 300 and 340. 340. Balance as per adjusted bank account as of 30th April 22, 340. Answer for the A, 300. Second one, the value of the check realized during the month. Realized check. They have deposited 80,000 check. Out of 80,000 checks, 30,000 checks not realized. Then deposited during the month and realized during the month 50,000. Deposited during the month and realized during the month itself 50,000. And a deposited check in March month realized in April month. How much? 20,000. Then total realized check during the month, during the April month, 70,000. 70,000. Answer for the B is 70,000. Why? Answer for the A is 340,000. Answer for the B is 70,000. 70,000. Okay, clear? Right. Right, now I look at the question number 186. Sorry, 185. 185. Right. Get the answer for this question. Indicate whether the following statements are true or false. True or false. True or false. Right. Then here, first one. A. The numerical accuracy of records is 35. Numerical accuracy of records. Records means maybe financial statements. Numerical accuracy of records. That is false. That is false. Here records, we can assume it as financial statements. Okay, financial statements. But numerical accuracy of double entries, okay, we can certify through the we can verify if relevance is equal. Okay, but here numerical accuracy of records is certified. That is false. Numerical accuracy of records. Okay, we can't accept that one. Therefore, A false. A false. Look at the B. The income of the period here is some not clear. The question is not clear. Okay, here numerical accuracy of records. We will assume records means financial statement. Records. Okay, records or reports. Right. That is false. Right. Look at the B. Look at the B. The income of the period is recognized after it is realized. Income of the period is recognized after it is realized. True or false? Yes, that is true. That is true. C. Going concern concept guide a business to adjust depreciation for a period. True or false? True or false? Yes. Based on the going concern concept, we make accumulated depreciation in the statement of financial position based on the going concern concept. Based on the matching concept, we adjust depreciation to the profit or loss statement. Okay. And here, going concern concept guide a business to adjust depreciation for a period. Yes, we can accept that. We can accept that. Right. C, line C, 2. Look at the D. Opening inventory of accounting period is recorded as an asset in the financial statements. No. Opening stocks, you need to transfer to profit or loss statement. Opening stock account credit, trading account debit. Opening stock credit, profit and loss account debit. Profit and loss account or trading account debit. Okay. Therefore, D false. D false. D false. Right. Right. Now, I look at the question number 186. 186. Look at the question. The trial balance of a business did not tally due to the following reasons. The trial balance, it should be trial balance. Yes, trial balance. Yes, trial balance. Of a business did not tally due to following reasons. Very question. An equipment repair expense of 60,000 incurred on 1st April 21 has been debited to equipment account mistakenly. And the profit for the period was calculated as 900,000 after deducting 10% annual depreciation on equipment. Here the question is wrong. The central points paper question is trial balance tallied. There is some error in accounting, but trial balance is tallied. Oh, that is wrong. Trial balance is tallied because of this error. Equipment repair expenses they have considered as equipment. They have recorded in equipment account. The trial balance is equal. Cash book credit, equipment account debit. And also they have provided 10% depreciation. 10% depreciation. Trial balance is telling, right? Write the journal entry to correct the above error with values. Write the journal entry to correct the above error with values. To correct the right correction entry. Now I right, look at the question. Try to get the answer. Right, 196A. Look at the question here. Repair expense of 60,000. They have recorded in equipment account. Equipment repair expenses they have recorded in the equipment account. Then how to correct that error? How to correct that error? Equipment repair account. Equipment repair account or profit and loss. Equipment repair account or profit and loss. Debit 60,000. Debit 60,000. And then equipment account. Equipment account credit 60,000. This is the correction entry. And not only that, they have provided depreciation for this one. Depreciation 60,000 into 10%. How much? 6,000. Then correction entry for the 6,000 is what? Accumulated equipment depreciation account debit 6,000 accumulated depreciation debit, and then depreciation expense account or profit and loss credit 6,000. They have provided 6,000 profit depreciation on that. This is the correction entry. If you record it separately, this is a correction entry. Okay, this answer is acceptable. But you can write this one like this also. Now here equipment repair account, oh, profit and loss account debit 60,000, and then here again P&L credit 6,000. They have provided 6,000 depreciation. Here, and they have already calculated profit of the business. They have calculated already, like they already have calculated the profit of the business organization. Here P&L debit, here P&L credit. You can record the net effect to the profit and loss in the general journal. Net effect, net double entry. Here, Lamai, net double entries. Here, profit and loss debit 60,000, profit and loss credit 6,000. Then net amount is how much? 54,000. Lamai, profit and loss account, debit, profit and loss account debit 54,000. Already they have calculated profit and loss of the business organization. Therefore, you can write this like this as well. Profit and net effect is here repair expense account debit equals profit and loss account debit, and then here P&L credit, depreciation expense account credit or P&L credit. The net effect is debit and credit. Net effect is 60,000 minus 6,000, 54,000. Profit and loss account debit 54,000. And then accumulated depreciation account debit 6,000. Accumulated depreciation account debit 6,000. Accumulated depreciation account debit 6,000. Equipment account, they have recorded 60,000 in the equipment account. Then equipment account credit 60,000. You can write like this as well. Profit and loss account debit 54,000. Profit and loss account debit 54,000. Accumulated depreciation account debit 6,000. Equipment account credit 60,000. This ability also correct. This one also correct. If not, you can record like this as well. Equipment account of P&L debit 60,000. Equipment account debit 6,000. Okay, you can record separate. And then accumulated equipment depreciation account debit 6,000. Depreciation expense account of P&L debit 6,000. Oh, you can write the net double entry. Profit and loss account debit 54,000. Accumulated depreciation account debit 6,000. Equipment account credit 60,000. 60,000. Net double entry. Answer for the question number 186. Question 186. A. Answer for the A. And then ask for the B. What is the correct net profit for the year 31st March 22? Correct net profit. Total impact on net profit. Here, total impact on net profit is 54,000. 54,000. Now, they have calculated profit as 900,000. From that 900,000, you can deduct net impact to profit. 54,000 you can deduct. You can get net 54,000. Then, how much? 846. Yes. Here, what is the correct net profit for the year? Correct net profit 846,000. Yes, 846. Yes, 846,000. That's the question entry. Right. Now I look at the question number 187. Look at the question number 187. Right. Look at the question 187. Try to get the answer for this question. Right. 187. State the most appropriate accounting concept relation to the following accounting practices. Right. Right. Most appropriate accounting concept. Right. What is the answer? Right. A land with a market value of 800,000 has been recorded that it is cost 650,000. Most appropriate accounting concept is what? Historical cost concept. Right. Second one, B, recognizing advances received from customers as a liability. Advances received from customers as a liability. Realization concept. Yes, realization concept. Question number 187, realization concept. Right. C, identifying depreciation as an expense in financial statement. The most appropriate concept is matching concept. Matching concept. D, inventory is valued as an asset at the lower of cost and NRV, net realizable value. Most appropriate accounting concept is one. Prudence concept. Prudence concept. Right. Now I look at the question number 188. Try to get the answer for the question 188. 188. Now I. What's the answer? A business sells goods on sale or return basis. Try to sell if not return. The remaining goods should be returned within 30 days. If you can't sell within 30 days, return the stocks. The stock costing 200,000 as 200,000 sent on 20th March 22. 20th March 22 to the agent after recording as a credit sales. And we have recorded it as a credit sales at invoice price. As of 31st March 22, only 60% of stock has been sold. It should be sold. Yeah, there's some printing mistake. It should be sold. Only 60% stocks has been sold. The business is keeping a profit margin of 30% on cost. The business organization keep 30% profit margin on cost. Markup. State the following relevant to the above transaction. The net adjustment that should be due the sales account balances. Here they have recorded total amount as sales. Cost of the stock. Cost of the stock 200,000. Selling price how much? How much selling price? 200,000 divided by 130. Markup 130. How much? 200,000 divided by 100 multiplied by 300, 130. 260. 260. Selling price 260. 260,000 selling price. And then out of this stock, 60% stock sold. Balance 40% remaining. Okay, they have recorded this total 260,000 as sales. But from this 260,000, you need to remove 40%. 40%. 40%. 40% you need to remove. Okay? 260,000 into 40% means 104,000 you need to remove from sales. Sales account, in the sales account you have recorded total 260,000, but from that amount you need to remove 104,000. Sales account debit 104,000, data control account credit. Then the net adjustments that should do the sales account balance is 104,000. 104,000. Sales account debit. Debit 104,000. Debit 104,000. B. The balance of the inventories that should be shown in the statement of financial position as at 31st March 22. Students, out of this stock 200,000, 40% remaining in the warehouse of the agent. Then out of this 200,000, 40% you need to add to the closing stock. You need to add to the closing stock. Then how much is 40%? 40% means 80,000. 80,000. Answer for the B 80,000. Now my answer for the A 104,000. Answer for the B 80,000. 80,000. Right. 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 Now I look at the question number third. Next question. Look at the question. Right. Look at the question number 189 and 190. Here, use the following information to provide answers for the 189 and 190. Yeah, right. Look at the question. Malini and Nalini. Here, Malini and Nalini are partners sharing profit in the ratio of 3:2. The drafted net profit for the year ended 31st March 22 was 350,000. Drafted net profit 350,000. It will reveal the following transactions are not recorded. These transactions has not been recorded. Here, goods drawings made by Malini and Nalini amounting to 10 and 20 respectively have not been recorded in books. Not been recorded in unrecorded drawings. Unrecorded drawings. B. An electricity bill of 4,000 of the business was paid by Nalini and it has not recorded in books. Unrecorded electricity bill. Electricity expense account debit, current account credit. C. Malini has provided a loan 200,000 to the business, but the interest for the loan has not been recorded since there is no provision in the agreement for loan interest. Now, based on the section 24, minimum 5% loan interest need to be paid. 189. Indicate the basis to record the interest on loan made by the Malini to the partnership. Basis is what? Basis is what? Better write down 5%, minimum 5% loan interest according to section 24. According to section 24 of Partnership Ordinance 1890. Minimum 5% loan interest according to section 24 based on according to section 24. Let's say according to Partnership Ordinance 1890, section 24, minimum 5% loan interest. Journal entry. What's the journal entry? Journal entry for the loan interest 200,000 into 5%. Minimum 200,000 into 5%. Then how much? 200,000 into 5%. 20,000, 10,000. 10,000. What's the double entry for that one? Double entry 189, 1 and 2. Second one, for the second one, profit and loss account, debit 10,000, debit 10,000, profit and loss account debit 10,000, and then current account, Malini, credit 10,000. Profit and loss account debit 10,000, current account Malini credit 10,000. That's the double entry. Right. Okay, right. Look at the question 190. Look at the question number 190. Now 190 says that revised net profit of the business as of 31st March 22. Revised net profit. And Malini's total profit. Okay, revised net profit of the business. Revised net profit how much? Draft net profit. 190, yeah, 190. Draft profit. 350,000. 350,000 draft profit. And then students, unrecorded stock drawings, total amount how much? 30. What's the double entry for the unrecorded stock drawing? Drawings account debit. Here, current account debit. Drawings account debit. Credit account credit. Oh, current here in this partnership, current account debit, credit account credit. Credit account credit means unrecorded drawings. You need to add. Total 30,000. You need to add back. Okay, right. Electricity bill of 4,000 of the business was paid by Nalini and it has not recorded in the books. Not recorded. Then unrecorded electricity. Electricity expense account debit 4,000. Current account Nalini credit. Nalini current account credit. C. Malini has provided the loan interest 10,000. Loan interest 10,000, you need to minus. Undercover electricity also you need to minus. Now profit, undercover revenues plus electricity 4,000 minus, undercover loan interest 10,000 minus. Then, and then there is no any other condition in the partnership agreement. Yes, no salary, no interest on capital. Therefore, profit of this is how much? 350,000 plus 30,000 minus 4,000 and minus 10,000, 366,000 net profit. Then, profit share of Malini, revised net profit 366,000. 190 first one, 190 first one, as for the first one 190, 366,000, and then 190 second one. Malini's profit share 300 divide by profit sharing ratio 3:2 divided by 5 multiplied by 3 multiplied by 3. 366 divided by 5 multiplied by 3. Here, students, profit share of Malini 219,600. 290,600 profit share of Malini. Okay, total profit share of Malini. Yes, there is no salary, no interest on capital. Therefore, 290,600 is a profit share of Malini. Right. Right. Enough for the day. Question number 191 onwards, we'll discuss from the next video. Right. Thank you. Thank you for watching.